I lost $22,000 day trading. Here's what I learned. Hey everyone, I'm Obby Trades, and today we're going to talk about how I lost $22,000 and blew up both my trading accounts in 2021. Now, making this video so that maybe it helps a newer trader out there learn and hopefully avoid making some of the same mistakes that I've made so far in my journey. I first kind of got into trading a little bit ago, back in 2016. I had first moved to California. I was about 23 working at a Starbucks and pretty quickly realized that I didn't exactly have enough money to give a proper shot at this, and I was probably better served focusing on how to make more money. So fast forward a few years later, now we're in 2021, it's March, it's the peak of the GameStop craziness, meme stocks galore. It seems like you can't lose in the stock market. The 2020 COVID bull run is in full effect, and I'm like, yes, this is the moment. This is the time to really give this the shot I've always wanted to give it. You know, I loaded up some money into my old Robinhood and TD Ameritrade and started trying to find the next big movers. I was sort of treading water. I had some basic understanding of charts and support and resistance from my initial foray into it, but like I had no idea of setups, like what setups even were, what to look for, how to predict the start of the next big momentum swing or anything like that. So I turned to the trusty internet to try and learn and take in as much info as possible, and obviously came across all of the gurus and the chat room alert services that you come across. So I bought anything to really give me some sort of leg up. I felt legitimately like I was learning, getting an idea of different strategies and setups, and the waters were feeling a little less murky. Now that doesn't mean I was making money. I was still kind of steadily going down a little bit, but I figured I was getting education, so it would all turn around eventually. Which, I noticed after a while, I would either have a string of green days followed by a massive red day, because I would get a few wins in a row. I'd start feeling really confident in myself and, oh, I can't lose. So then I would swing really, really big. I mean, I would swing for the fences. And of course, being so oversized, I would completely forget how to properly manage a trade. And so then I would take a big fat loss. Or the other thing that would happen was I would take a couple small losses and my frustration would start building up, and then out of rage, I would take one fat loss because I would be over aggressive in a trade. At that point, I was like, man, this is a me issue. This is not like a trading issue. This is like I got some stuff going on in my mind that's keeping me from being able to execute correctly. You hear about this adage of traders taking out their own psychological issues into the markets, and I was always like, man, that's not me. Like, I'm way too smart for that. Clearly, I was not, but I recognized it, right? So all of a sudden, I was like, man, I got to dig into some trader psychology stuff. That's when I came across some of the really good creators out there, Be The Story, SMB Capital, Mark Douglas, and Dr. Steenbarger, two specifically that focus on psychology, and was like, okay, cool. So I started trying to retrain myself to be okay and to really dial in that consistency. It really all comes down to the consistency of your bet sizes, especially if you're trading a system. Like, you just want to take advantage of probabilities. You're not trying to say this one specific instance of this particular setup is gonna be the winner. With that in mind, I was able to go back and get myself just about $1,000 away from overall break even. I was so excited. I was like, oh my God, yeah, like this is it. I can do this. I've gotten this under control. 2022 is gonna be the year, right? So at this point, it's New Year's week. I'm about $1,000 short of break even overall. And I'm like, you know what? That's doable. I can make $1,000 on this last week of the year. That way I can start 2022 off strong. Man, what a mistake that was. That is the horrible, horrible mindset to have. I mean, to go into with the specific goal of having to make money for an arbitrary reason? No, because what happened? I started taking trades that were less than ideal, because I just needed to get a couple quick wins and be easy, right? No. So I ended up taking a string of small losses in one of the trading accounts, and I started getting tilted. I started getting frustrated, right? When your emotions flood over you and takes over your decision making, they call that trading on tilt in poker. It's basically when your emotions rob you of your ability to make rational, logical decisions, and usually it manifests in a player being very, very over aggressive in their play style, which exactly fits me to a T, because after about 2 or 3 losses in that, I decided I was gonna just, you know what, I'm gonna throw everything into this big YOLO options bet, right? So what was that YOLO options bet? Well, I decided that I was going to put everything on Rivian, the EV IPO darling that pretty much marked the peak of EV frothiness in the markets. That stock would end the week under $100. Now, Rivian just had broken the $100 level after its IPO high of $175. It had just started putting up a bounce after breaking the 100 level. Went up to about $107 a share before heading back down. And that's when I came in. I was like, you know what? Yeah, this bounce is over. It's definitely going back under 100. So you know what? It's going to close this week under 100. I'm betting everything on it. Everything. At that particular point in time, everything was my Robinhood account with about $12,000 in it. I put it all in a credit spread for a $100 strike expiring that week. Gave me about 40% premium, which was about $5,000, I think. And I was like, cool, sure thing. Well, sure enough, Rivian ended the week over $100, and I took a fat $6,000 loss. Overnight, immediately done. I was just gutted. And you know what? I was gutted the second I got in the trade too. And I was just like, oh, that was a horrible decision. The problem was I, at no point in the week, was able to get out of the trade in Robinhood for anything less than like a 75-80% loss, which at that point was like, well, I might as well just see how the trade plays out. Anyway, so that's part one, and I wish I could end the story there, but that's only $6,000, and remember, I lost 22, so it gets worse. I'll finish it off this way. I ended up taking that last $5,000 and grinding it down to $300 over the first week of January, trying to flip it back into even more risky bets, because I was just in a state of desperation. Like, I truly have no idea why I thought that was okay. No idea. Meanwhile, because I had my money split up into 2 different accounts. Well, the TD Ameritrade account, I actually ended the year up on slightly. So I was like, you know what? The Robinhood thing? Nah, that's not me. That was just a mistake. An isolated incident. There's no way. I know what I'm doing, because look, the TD Ameritrade account's up on the year. Anyway, I knew I made a big oopsie. So I focused in, and I just started running this one strategy, SPY options. And that actually was working really, really well. I had almost 2 weeks of straight green days. I was like, oh yeah, I got this. I'm back, baby. So what did I think was a great idea? Well, I had a retirement account over at Vanguard, and I thought it would be a great idea to do a brokerage transfer. Let me take that Vanguard IRA, transfer it over to TD Ameritrade so I could run this option strategy with more capital. I know, telling you guys right now just is like, oh my God, how did I think that was a good idea? But somehow I did. And so I did the brokerage transfer. And there's something interesting that I want to point out. I eventually stopped treating these 2 accounts separately. So in the main account, I would run the strategy and I would have 3 contracts total as a max position size, right? But in the IRA, I would take 10 contract positions because I had more capital. Well, things kept going pretty well. And I was like, you know what? I think I'm going to take some 10 contract positions in this main account so I can grow a little faster, right? That was horrible. Because what happened was I would take losses in the main account, but then I'd make it back in the IRA plus some, right? So I knew that I needed to like go back to treating them as two separate accounts, but by then it was too late. Like the very next day, I took a massive $5,000 loss in the IRA. And by the end of February, the IRA balance had gone down to about $14,000 and the main account had gone down to about $2,000. So my IRA, my retirement account, is now under its initial balance, plus the main account is on life support. And it was at that point that I realized how far off the deep end I really was. I thought I had it under control. After that big Robinhood oopsies, I did not. This was actually just a whole month or 2 months of just slowly slipping down the slope, getting worse. So I wanted to highlight how treating the two accounts, like moving it over to TD, and when you log in, it shows you the total between all accounts. I started focusing on that, which is totally incorrect. You have to treat each account separately. And then the second thing was the fact that even though I never got into positive account equity, I still convinced myself that it was okay to take more and more risk because of the false sense of security of like, oh, well, I brought myself up from the depths, as if that was justification enough to increase size. But it really wasn't. And every time I did that, things just got worse, progressively worse. The last thing I want to bring up is how tilt can completely destroy your ability to perceive and manage risk. Take the Rivian trade, for example. Something as simple as changing the contract expiration date to something that was out a few months would have made all the difference. Because today, Rivian is trading somewhere in the 30s a share range. Great idea, terrible execution. So if you're a new trader, definitely don't be in a rush to size up into anything. In fact, do yourself a favor. Keep some money outside of your trading accounts just in case. And that's what I'm doing. I mean, I still have the main day trading account that still has about $1,300 in it, give or take, depending on when I post this video. Otherwise, everything else is just kind of sitting in my bank account, especially with taxes coming up, which, fun fact, I basically lost as much money as I owe in taxes. So that's been super fun to dig myself out of that hole. And anything after taxes at this point, I'm just not going to be afraid to reinvest back into business things. If it's getting a new camera, if it's going to industry conferences, if it's continuing education for acquiring new skills, any of that stuff. I mean, if the alternative is having it in an account at risk where I could just throw it into a big dumpster fire, well then at least in the former I would have something to show for the money spent, be it equipment or acquired skills. Otherwise, anything else is just going into a broad stock market index fund, a little bit of Bitcoin, a little bit of Ethereum. That about does it. If you're a new trader, I hope you learned something from this story. Definitely don't be in a rush to size up. There's no need for you to lose as much money as I have trying to learn how to do this. If you want to watch some more trading videos, I got one link right there for you. Otherwise, if you got value out of this video, please hit the like button, helps grow the show. Consider subscribing and let me know in the comments down below what other types of content you want to see from this channel. I'm Aubrey Trades. I'll see you in the next video.